Something unprecedented is happening in the aviation market right now, and if you own an aircraft or you're thinking about buying one, what I'm about to reveal will completely change how you see the industry. This isn't just another story about market fluctuations or seasonal trends. This is about a perfect storm that's been building for months, a crisis that's forcing thousands of retired pilots to make decisions they never imagined they'd have to make, and a market collapse that industry insiders are whispering about behind closed doors, but nobody wants to talk about publicly. Before I show you the data that proves everything I'm saying, before I reveal the names of the companies that are quietly liquidating their fleets, before I expose the financial trap that's ensnaring pilots across the country, you need to understand one thing. What's happening right now has never happened before in aviation history. Not during the financial crisis of 2008, not during the dot-com bubble burst, not even during the depths of the pandemic. This is different, and the implications are staggering. You might have noticed headlines about pilot shortages being over, about airlines pausing hiring, about the booming post-pandemic travel surge finally cooling down. But those are just the surface-level stories. What the mainstream media isn't telling you is what's happening in the shadows of general aviation, in the world of private aircraft ownership, in the lives of thousands of retired pilots who spent decades in the cockpit and invested their life savings into the dream of owning their own planes. These pilots are now facing a nightmare scenario, and the ripple effects are about to reshape the entire used aircraft market in ways that will take decades to recover from, if they ever do. Let me paint you a picture of what's unfolding right now across the country. Imagine you're a retired airline captain. You spent 40 years flying for a major carrier. You retired at 65 with a decent pension and a dream. That dream was to own your own aircraft, maybe a Cessna, maybe a Piper, something you could take up on weekends, fly to visit your grandkids, take friends on short trips, and just enjoy the freedom of flight without the schedules and pressures of commercial aviation. So you did what thousands of other pilots have done. You bought a plane. Maybe you spent 50,000, maybe 100,000, maybe more. You thought you were making a solid investment. After all, aircraft have historically held their value reasonably well, especially if properly maintained. But then everything started to change, and it happened faster than anyone could have predicted. The first domino fell when the used aircraft market, which had been on an absolute tear during the pandemic, suddenly started showing cracks. During 2021 and 2022, used aircraft prices went through the roof. People couldn't travel commercially. Wealthy individuals wanted private options, and supply chain disruptions meant new aircraft deliveries were delayed by years. If you owned a plane during that time, you were sitting on what felt like gold. Some aircraft appreciated by 20, 30, even 40% in just 2 years. Owners who had been thinking about selling couldn't believe their luck. But by late 2023, the party was over. And now, in 2024 and heading into 2025, we're witnessing what can only be described as a controlled collapse. The data tells a story that's both clear and terrifying for anyone holding aircraft right now. According to the latest market reports from Sandhills Global, one of the most respected tracking firms in the aviation industry, asking prices for used jets have fallen consistently month over month and year over year. We're not talking about small adjustments here. Year over year asking prices are declining for used jets by nearly 5%, piston, single aircraft, turboprop aircraft, and helicopters. But here's the thing that should really alarm you. Those are asking prices. That's what sellers hope to get. The actual transaction prices, what buyers are actually willing to pay, are often significantly lower. Industry insiders are reporting that aircraft are sitting on the market for months, sometimes over a year, without finding buyers at the listed prices. Sellers are being forced to reduce their asking prices multiple times, often dropping them by 10, 15, sometimes 20% or more just to generate interest. And even then, many aircraft aren't moving. Inventory levels have risen dramatically, with jets up over 8% year over year in some months, flooding the market with available aircraft while demand has simultaneously contracted. Now here's where it gets personal for retired pilots, and this is the part that nobody in the aviation media is connecting properly. These market dynamics wouldn't be catastrophic on their own. Markets go up and down. But for retired pilots specifically, there's a series of compounding factors that are creating a genuine crisis. First, consider the basic economics of aircraft ownership. It's expensive, really expensive. We're not just talking about the purchase price. Every year, an aircraft owner faces a mountain of fixed costs, regardless of whether they fly the plane or not. Hangar fees alone can run anywhere from $3,000 to over $10,000 per year, depending on location. Insurance for a single-engine aircraft can cost anywhere from $500 to several $1,000s annually, and that's just for liability and hull coverage on a modest plane. Annual inspections are mandatory and typically cost between $600 and several $1,000s, depending on the aircraft type and what squawks the mechanic finds. Then there are the variable costs. Fuel is a huge expense. Even a modest single-engine plane, like a Cessna 172, burns about 8 gallons per hour. And with avgas prices ranging from $5 to $8 per gallon or more at many airports, you're looking at $40 to $70 per hour just in fuel. Oil changes every 50 hours. Maintenance reserves for eventual engine overhaul, which can cost $15,000 to $40,000 or more when that time comes. Add it all up, and even if you only fly 100 hours per year, you're easily spending $20,000 to $30,000 annually on a plane that might be worth $50,000 to $100,000 in today's depressed market. For a retired pilot on a fixed income, these numbers start to look unsustainable very quickly, especially when the value of the asset itself is plummeting. You bought your plane for $80,000, thinking it would hold its value or maybe even appreciate like it did during the pandemic. Now it's worth $60,000 and falling, but you're still paying all those ownership costs. The math stops working. But wait, it gets worse. Remember when I mentioned at the beginning that there's a financial trap ensnaring pilots? Here's what I mean. Many retired pilots didn't buy their aircraft outright with cash. They financed them, just like you'd finance a car or a house. During the pandemic boom, lenders were happy to provide aircraft loans. Values were rising, the market seemed stable, and pilots with good credit and solid income could get financing with reasonable terms. But now, those same pilots are underwater on their loans. They owe more on the aircraft than it's currently worth in the market. This is the classic negative equity situation, and it's devastating. If you need to sell because you can't afford the operating costs anymore, you can't just sell the plane and walk away. You have to come up with the difference between what you owe and what a buyer will pay. For some pilots, that difference is $10,000, $20,000, $30,000 or more. They're trapped. They can't afford to keep the plane, but they can't afford to sell it either. This is creating what economists call a forced liquidation scenario. Pilots aren't selling because they want to. They're selling because they have no choice. Maybe their income situation changed. Maybe health issues mean they can't fly anymore and can't justify keeping an expensive asset that's just sitting in a hangar, depreciating. Maybe the costs have simply become too much to bear. Whatever the reason, they need out, and they need out now. And when you have hundreds, possibly thousands, of retired pilots all trying to sell aircraft at the same time, all competing for the same limited pool of buyers, all willing to accept lower and lower prices just to make the sale happen, you get a market in free fall. The charter and fractional jet market is showing similar patterns, but for different reasons. Remember the NetJet story, where approximately 100 pilots over 70 were terminated in January 2024 after the company implemented a mandatory retirement age. Those pilots, many of whom had been flying for decades and earning good salaries, suddenly found themselves without income. Many of them owned aircraft personally, either for recreational flying or as investments. Without that charter income, some of them are now facing the same dilemma as retired airline pilots. The fixed costs of ownership haven't changed, but their ability to cover those costs has disappeared. Even more concerning is what's happening in the broader economy that's affecting aircraft buyers. Interest rates have risen dramatically over the past 2 years. The Federal Reserve raised rates aggressively to combat inflation, and while that policy may have helped cool the economy, it's made borrowing significantly more expensive. Financing an aircraft today costs much more than it did in 2021 or 22. This means the pool of potential buyers who can afford to finance an aircraft purchase has shrunk considerably. At the same time, the stock market volatility and general economic uncertainty have made people more cautious about discretionary spending. Buying an aircraft is the ultimate discretionary purchase. When people feel uncertain about the economy, when their retirement accounts are fluctuating, when they're hearing news about potential recessions, they don't rush out to buy airplanes. They wait. They preserve cash. They sit on the sidelines. This creates a vicious cycle in the used aircraft market. More sellers, fewer buyers, falling prices. As prices fall, people who are considering buying decide to wait longer, hoping prices will fall even further. Why buy today if it'll be cheaper in 6 months? This waiting game accelerates the decline because it further reduces demand while supply continues to build. Industry data supports this narrative completely. Reports from companies like Duncan Aviation, one of the leading aircraft service providers, noted back in early 2024 that buyers who purchased aircraft at the height of the market in 2022 would likely need to accept losses if they tried to sell. Experts predicted that prices would return to pre-pandemic levels by the end of 2024, which is exactly what we're seeing happen now. But here's the critical question that everyone should be asking. Will prices recover? Will the market bounce back once this forced liquidation phase passes? And this is where I have to deliver some hard truths that the aviation industry doesn't want to acknowledge. The structural factors that drove the pandemic boom aren't coming back. That was a once-in-a-lifetime perfect storm of circumstances. Commercial travel restrictions, government stimulus money flooding the economy, ultra-low interest rates, supply chain disruptions creating artificial scarcity. All of those factors aligned to create unprecedented demand and pricing in the used aircraft market. Those conditions are gone, and they're not returning anytime soon. Looking forward, the demographic trends are actually quite negative for the general aviation market. The pilot population is aging. Yes, there are efforts to recruit younger pilots, but the economics of learning to fly and eventually owning an aircraft are daunting for younger generations facing student loan debt, high housing costs, and uncertain economic prospects. The typical private aircraft owner profile skews heavily toward older, wealthier individuals, and as that generation ages, more of them will be selling than buying. The regulatory environment isn't helping either. Ongoing discussions about retirement ages, medical requirements, and various FAA regulations create uncertainty. Pilots nearing or in retirement face questions about how long they'll be able to maintain their medical certificates. If there's uncertainty about your ability to continue flying, you're less likely to hold on to an expensive aircraft. The cost side of the equation isn't improving either. Avgas prices remain high. Insurance companies have been raising premiums across the board as they've faced increased claims and market volatility. Hangar space is becoming harder to find in many areas as airports close or redevelop their land for other uses. Maintenance costs continue to rise as parts become more expensive and qualified mechanics become harder to find. All of these factors make aircraft ownership more expensive every year, which reduces the pool of people who can afford it. Technology is also playing a role that many people haven't fully considered. Flight simulation has become incredibly sophisticated and affordable. Young people who might have been drawn to recreational flying can now get a remarkably realistic experience through high-end flight simulators at a fraction of the cost of actual aircraft ownership. This doesn't replace the real thing for serious aviators, but it does siphon off some of the potential entry-level demand that might have fed into the owner market over time. Let's talk about what this means in practical terms for different groups of people. If you're a retired pilot who currently owns an aircraft and you're thinking about selling, you're in a very difficult position. The data suggests that waiting is unlikely to improve your situation. Prices aren't showing any signs of recovery. In fact, all the trend lines point to continued decline. Every month you hold the aircraft, you're paying those fixed costs while watching the value erode. The longer you wait, the more you lose. Your best strategy, as painful as it might be, is probably to sell as quickly as possible. Take whatever loss you need to take and cut your ongoing expenses. Yes, it hurts to sell an aircraft for significantly less than you paid for it. Yes, it feels like admitting defeat on a dream. But from a pure financial standpoint, continuing to hold a depreciating asset that's costing you $2,000 to $3,000 per month or more in ownership expenses is throwing good money after bad. If you're someone thinking about buying an aircraft, this might seem like great news. After all, falling prices mean better deals, right? Well, maybe. The challenge is timing the bottom of the market. We're clearly in a declining market, but how much further will it fall? If you buy today and prices drop another 10 or 15% over the next year, you've immediately lost significant value. On the other hand, if you wait too long, you might miss the actual bottom, and once the market does eventually stabilize, the best deals will be snapped up quickly. The strategy for buyers should probably be to look for distressed sellers, pilots who absolutely need to sell and are willing to negotiate significantly below asking price. Those opportunities exist right now. Be patient, be ready to move quickly when you find the right deal, and don't pay asking price. In this market, everything is negotiable, and sellers who need out will work with you if you're serious. For the aviation industry broadly, this market situation has massive implications. Flight schools that own training aircraft are watching their fleet values decline. This affects their balance sheets and potentially their ability to secure financing for operations or new aircraft purchases. FBOs that offer rental aircraft face similar challenges. Charter operators are dealing with both falling asset values and changing employment dynamics as the pilot market shifts. Aircraft manufacturers are watching nervously as well. When the used market crashes, it puts downward pressure on new aircraft prices too. If you can buy a perfectly good used Cessna 172 for $50,000, why would you pay close to $300,000 for a new one? This pricing pressure forces manufacturers to either cut prices, offer incentives, or accept lower sales volumes. All of those options hurt their bottom line. The financing side of the industry is also in flux. Lenders who provided aircraft loans during the boom are now sitting on portfolios of loans secured by aircraft that are worth less than the outstanding loan balances. Some of these loans will go bad as borrowers default. Banks will repossess aircraft, which they'll then have to sell, adding even more inventory to an already oversupplied market. This could create a secondary wave of downward price pressure as lenders liquidate repossessed aircraft. Insurance companies are reassessing their risk models. A market in decline with increasing numbers of distressed sellers and potential defaults represents increased risk. This likely means higher premiums for everyone going forward, which again makes ownership more expensive and reduces demand further. Now let me address something that some people might be thinking. Could there be a policy intervention that changes this trajectory? Could the FAA or Congress do something to stabilize the market? The honest answer is probably not, and even if they could, they probably shouldn't. Government intervention in asset markets typically doesn't end well. The aircraft market needs to find its natural equilibrium based on actual supply and demand, not artificial props. The pandemic boom created distorted prices that weren't sustainable. What we're seeing now is a painful but necessary correction back to realistic valuations. That said, there are policy areas that could affect the long-term health of general aviation. Efforts to make pilot training more affordable could help build the next generation of pilots who might eventually become aircraft owners. Reforms to the medical certificate process that make it easier for aging pilots to continue flying recreationally could help maintain demand. Policies that support airport infrastructure and prevent airport closures could help preserve the ecosystem that general aviation depends on. But none of those things will fix the current market situation. The pilots who are being forced to sell their aircraft right now, the retirees who are taking huge losses on dreams they spent decades planning for, they're not going to be saved by policy changes. Their losses are real and they're permanent. What's fascinating and tragic about this whole situation is how quickly it happened. Just 3 years ago, aircraft owners felt like geniuses. Their planes were appreciating rapidly. The market seemed unstoppable. Fast forward to today, and many of those same owners are desperate to get out at any price. This is a textbook example of how markets can turn, how quickly circumstances can change, and how dangerous it can be to assume that recent trends will continue forever. The human cost of this market collapse is something that doesn't show up in the data charts and market reports. These are real people, real families, real dreams that are being shattered. Imagine being 72 years old, having spent your entire adult life as a professional pilot, having finally achieved the dream of owning your own aircraft, only to be forced to sell it at a massive loss because you simply can't afford the carrying costs anymore on your fixed retirement income. That's not just a financial loss, that's an emotional and psychological blow that's hard to quantify. Some of these pilots bought their aircraft with money they had saved specifically for retirement activities. They thought they were being smart, investing in something they could use and enjoy that would hold its value. Instead, they're watching their retirement savings evaporate as they're forced to accept pennies on the dollar just to get out from under the burden of ownership. The industry veterans I've spoken with off the record paint an even bleaker picture than the public data suggests. They talk about aircraft that have been on the market for over a year with no serious offers. They describe sellers who have dropped their asking prices by 25 or 30% and still can't find buyers. They mention repossessed aircraft sitting in hangars while banks try to figure out what to do with them. They reference pilot forums filled with desperate posts from owners trying to figure out their options. One thing that makes this situation particularly challenging is the illiquidity of the aircraft market. Unlike stocks or bonds that you can sell with the click of a button, selling an aircraft is a lengthy process. You need to find a buyer, negotiate terms, conduct pre-purchase inspections, handle title transfers, deal with financing if the buyer needs a loan, and complete a mountain of paperwork. Even in a good market, this process typically takes months. In a bad market, it can take over a year, and during that entire time, you're continuing to pay all the ownership costs. This illiquidity creates a situation where owners can see the market deteriorating but feel powerless to do anything about it fast enough to avoid the losses. By the time you decide to sell, list the aircraft and find a buyer, months have passed, and the market has fallen further. It's like watching a slow-motion car crash and being unable to stop it. Looking at the international perspective adds another layer to this story. The used aircraft market is global, and what happens in the United States affects markets worldwide. American aircraft are often exported to other countries where the dollar exchange rate makes them attractive to foreign buyers. But with a strong dollar and economic uncertainty globally, even that outlet for excess inventory is constrained. Countries that were historically strong markets for used American aircraft, places like Brazil, Mexico, and various European nations, are dealing with their own economic challenges. Currency fluctuations make dollar-denominated purchases more expensive. Regulatory differences can complicate imports. All of this means that the global buyer pool is smaller than it has been historically. The commercial airline situation adds yet another dimension to this problem. While we're talking primarily about general aviation and private aircraft, the dynamics in the commercial sector are influencing what happens in the private market. Airlines have paused or slowed pilot hiring, which means fewer pilots are moving up through the ranks and increasing their incomes to the point where they might consider aircraft ownership. Regional airlines that were offering generous signing bonuses just 2 years ago have pulled back those incentives. Some have even furloughed pilots. This employment uncertainty in the commercial aviation sector creates a psychological effect that dampens enthusiasm for large discretionary purchases like aircraft. Even pilots who are currently employed and financially stable are more cautious about taking on the long-term financial commitment of aircraft ownership when they see colleagues being furloughed or hiring freezes at their own airlines. The training pipeline situation is also worth considering. Flight schools saw massive enrollment during the pandemic and immediately after as people pursued new careers or rekindled aviation dreams. But now, with airline hiring slowing and the job market less certain, flight school enrollments are declining in some areas. Fewer new pilots entering the system means fewer potential future aircraft buyers a decade from now, when those pilots might have reached the income level and experience level where ownership becomes attractive. Insurance companies are also pulling back from the aviation market in ways that are making ownership more difficult. Some insurers have exited aviation altogether after facing higher than expected claims. Others have dramatically tightened their underwriting standards, making it harder for pilots, especially older pilots or those without recent flight experience, to get coverage at any price. Without insurance, you can't legally fly the aircraft, and you certainly can't hangar it or finance it. This insurance squeeze creates another forced seller category. Pilots who can no longer get affordable insurance are effectively grounded, even if they're medically fit and want to continue flying. At that point, keeping the aircraft makes no sense, so they join the ranks of sellers flooding the market. Maintenance shops and parts suppliers are feeling the pinch as well. When owners are financially stressed, they tend to defer maintenance where possible. They fly less to reduce wear and tear. They shop around harder for better prices on parts and labor. All of this affects the businesses that support general aviation. Some smaller maintenance shops are struggling. Parts suppliers are dealing with reduced order volumes. This creates a negative feedback loop where the infrastructure that supports aircraft ownership becomes weaker, which makes ownership less attractive, which reduces demand further. The bottom line, and this is what everyone needs to understand, is that we're witnessing a fundamental repricing of general aviation aircraft that will likely persist for years. The pandemic boom was an anomaly. The new normal is a market with more sellers than buyers, with falling prices, with longer holding periods, and with many owners trapped in negative equity situations they never imagined possible. For retired pilots specifically, this is a crisis that's destroying dreams and devastating finances. These are people who dedicated their lives to aviation, who spent decades ensuring the safety of millions of passengers, who followed all the rules and saved their money and tried to do everything right, and now they're being punished by market forces beyond their control. The aircraft they bought as the centerpiece of their retirement plans have become financial albatrosses around their necks. The freedom and joy they imagined has been replaced by stress and financial anxiety. The community and identity they found in aircraft ownership is being ripped away as they're forced to sell. This isn't just about money. It's about dignity, about purpose, about the crushing disappointment of watching a lifelong dream collapse. And the saddest part, for most of them, there's no way out that doesn't involve significant financial loss. They can sell now and take the hit, or they can hold on longer and likely take an even bigger hit while paying thousands of dollars per month in carrying costs. Either way, they lose. The phrase I used in the title, that prices will never recover, might seem like hyperbole. But when you understand all the structural factors at play, when you see the demographic trends, when you consider the economic headwinds, when you factor in the fundamental changes in how people view aviation and aircraft ownership, it becomes clear that a return to 2022 prices is extraordinarily unlikely. Will the market eventually stabilize? Yes, probably. At some point, prices will fall low enough that they attract value buyers. At some point, the forced liquidation phase will end. At some point, supply and demand will reach a new equilibrium, but that equilibrium will be at a much lower price level than what we saw during the pandemic boom, and quite possibly lower than the pre-pandemic baseline once you adjust for inflation. This is the untold story of the used aircraft market in 2024 and beyond. This is what's happening to thousands of retired pilots across the country. This is the crisis that nobody in the aviation industry wants to talk about publicly, because acknowledging it might accelerate the decline. But it's real, it's happening right now, and it's going to reshape general aviation for a generation. If you own an aircraft, if you're thinking about buying one, if you're planning your retirement around aircraft ownership, or if you're just someone who follows the aviation industry, this is the story you need to understand. The market has fundamentally changed. The old assumptions no longer hold, and retired pilots, the men and women who gave their lives to aviation, are the ones paying the price.